Hello guys and girls, welcome back to another episode on the Falcon YouTube channel. Hope you're all doing really well, and again, appreciate all of the feedback, comments. You know, this channel wouldn't be where it is if it wasn't without the constant engagement, turning up to the lives. I really appreciate it. And again, just engaging with you all, just creating that content that's gonna help assist you in your trading journey and in your mindset journey as well, because that is really, really key. So you've probably seen from the title about how not to blow your account, or the quickest way to blow your account. Well, with the recent things that's happened in the market, I thought this would be a great time to address it. We have so many questions, so many comments, people messaging in, emailing in, and just talking about things like, I've blown my account, I've got ahead of myself, and all these kind of things. And truth be told, the quickest way to blow your account is to not stick to risk. We know that. But we have to understand, why do people do it? So I'm hoping this video gives you guys and girls a bit of perspective. It doesn't matter what system you're trading. People don't follow risk. So you could be following something really good and then you decide to get ahead of yourself, you feel invincible, and then you over risk. So it's not always the system itself, it's the individual. So we need to address, why is that happening? And why do people feel the need to do it? Well, it normally comes from that get rich quick mindset. We feel invincible, we do well for a little period, and then we just get ahead of ourselves. Now, this is tried and tested from not just people that are not experienced, people with experience, people that have capital under management in the millions, if not billions, it's happened. So I want to go into a few stories as well, but first up, let's actually take a look at how those gaps affected the markets. Right, so really quickly, I just want to show you one currency pair here on USD CAD. So USD CAD, this was actually something we was looking for some selling opportunities, and then we gapped up. Now imagine you're already holding positions here. Look at the gap that we can see. Imagine you're already holding positions and you decide to play with the numbers because you're just following a way that's ultimately going to blow your account. You decide, right, I'm going to risk 5%. And then over the weekend, market opens, and then guess what happens? Gaps up, you've now lost due to slippage way more than what you expected. Let's go to the 1 hour chart. So in this area here, we were looking for selling opportunities. Falcon community, you'll know what we're talking about. And then guess what? Because you feel invincible and you get cocky, you risk more. And then what happens? Well, think about it. If you, let's say, lose 10% of your account, 10% of your account on, you know, £1,000, not that much. £100, you can replace that. If you've got an income and you're working, you can replace that really easy and you can kind of get on with it. You don't think that that bad habit is an issue. Let's say that happens on 100K, you've lost 10,000. In this type of situation now, so you're trading it, you lose 10,000 just from that one little moment there. Then what? You're going to replace that 10K? You probably don't have the resources to be able to do that. Then what do? You start revenge trading, start risking more. Before you know it, you're 20% drawdown. And then you look at things and you follow a procedure that, well, it doesn't matter if you're in drawdown because you still follow the same system. Well, yeah, that's true. But if you're following a system that is gambling, then you're ultimately going to blow your account. So you need to follow a system that promotes protecting your capital. That's just a tiny little gap here. But the damage that can do to your hard work is insane. I mean, we even had it in, let's take a look at Euro Kiwi. So Euro Kiwi was the same. We had a gap there. Look at that type of price action. So we were looking for some selling opportunities on this, and then it just gaps. You know, you think, we've seen gaps before. Gaps will always exist in the market. You know, they're becoming a little bit more frequent. But you can wipe out so much of your hard work. Don't do yourself a disservice, regardless of how you trade. Don't play with the numbers, stick to a system, because literally overnight, these things, they happen. And they can wipe out not just people that, you know what they're doing, people that don't know what they're doing, people that have, you know, they've got capital under management in the millions and they're still making these mistakes, because you cannot beat that with the market. If you're trying to beat the market, you're trying to beat these gaps, thinking that this will never happen to you, then it will, and then it will just wipe you out. So get your head in the game and focus on the long run. But guys, let's get into a bit of context now. I want to share with you a story that I think will give you a really, really interesting perspective. So as you can see, guys and girls, with the gaps, you do not want to be messing about with that. And like I said, you know, you lose 10% of 1,000, doesn't really matter so much. You lose that of 100K, 250K is very, very different. So just understand, set yourself up for success. Don't promote that kind of thing that's going to give you reasons for that to happen, because you can't beat the market. It's not about that. We're not in competition with the market itself. Remember, probabilities. If you go into drawdown, you follow a system that is not encouraging you to blow your account, because yes, when you're in drawdown, you don't want to change up what you're doing because it's the law of probabilities. You want to be doing the same thing over and over again, following the system. But if you're risking, let's say, 5% of your account per trade, well, that's going to wipe you out if you keep doing that. And most people think that if they're risking 1% per trade, it's okay to have 5, 10 multiple positions opening at once, thinking, well, I'm only risking 1% per trade. Yeah, but you've got 10 open trades running, so you're risking 10%. You know, you don't understand what you're doing. And what happens there, when the market turns, when you least expect, you've now wiped out 40, 50% of your account. Then how are you going to feel? How are you going to claw that back? See the kind of mindset you're in now? You're thinking about clawing it back, revenge trading, and you have to make a lot more to get back. If you're down 40%, you don't have to make 40% to get back to break even. You have to make more than that. And that's what people don't think about. They don't actually understand. Imagine your emotional state in those moments, and when you're trading other people's money as well. It's delusional. So just get your head in the game and focus. No one wants to get rich slow. You hear Warren Buffett talk about it. Yeah, it's actually very simple. Just stick to risk. Stop chasing percentage games. You know, you might be someone who's scalping. You might be a scalper, for example, and you're thinking that 7 pip stop losses are sustainable. You know, you might be able to show me that you can do that, but in the long run, it will come to bite you in the ass. So focusing in a way that is sustainable is so key. A story that kind of brings to mind is long-term capital management. You've probably heard about it in the 90s. You know, these are some seriously switched on, intelligent people. I'm talking Nobel Prize winners, professors, people, very, very intelligent people that are doing really well, and they've done really well for a period of time. I remember, was it first year, something like 20%. You can go and research it. Second, 40%. Second year, 40%, and then so on and so on. And then they started over leveraging, over risking, and then following certain ways, and in which that they ultimately lost it. Hundreds of millions. You know, it is insane. And when you think about it from that perspective, that these are some really, really smart people, the smartest people in the world, and then they wipe themselves out. So why on earth would you think that doing these kind of things and over risking and just deciding to play with the numbers that it's going to work, if the smartest people in the world, they still fuck it up? So you've got to realize in the long run, it's not going to work out for you. And if the smartest people in the world can mess it up, then so can you. And what can we learn from that? What does that teach us, no matter what we're doing? What it teaches us is that we cannot override risk management, no matter how intelligent we are. When we become more intelligent, actually, that promotes more of our ego. So I've met people before, very intelligent people. From an IQ perspective, academically, they know so many theories. They're so intelligent, yet they can't trade. Why is that? It's because their ego's involved. And when your ego's involved, you always think you're right. So remember, the market doesn't care how intelligent you are. It's about systems, processes, and procedures. And for what happened recently in the market, it's probably humbled a lot of people. At Falcon, we stick to risk. Other strategies, they stick to risk as well. So you're better off, rather than getting too, exposed to the market, you're better off sticking to something that you follow the numbers. So what I mean by that is that rather than deciding on how you feel and having all of these multiple positions opening at once, just stick to risk at, let's say, 2%. I don't endorse it, we don't encourage it, but if you're going to do something and you just have that risk appetite where you always feel like you need to risk more, at least just stick to the number. Say whether it will be 2% or 3% or 1.5%, at least just don't play with the numbers. Stick to the same number all the way through, because you can't pick and choose, is what I'm saying, when it happens. You can't pick and choose when the market's going to give you that profit. So you want to set yourself up in a way that is not emotional, because it's not nice to be in drawdown. Let me know, by the way, in the comments if you have experienced that of drawdown. You might have even clawed it back. It's not fun, is it? It really isn't. And there is no way on earth you'll be trading bigger capital with that kind of mentality, because this is how it's accidents waiting to happen. This is why people that you think, wow, they've got control over all of this capital and that they lost 80 million. You hear these stories, you think, how on earth did that happen? Well, risk management. It's not about how intelligent you are or how much money you have. It's about you cannot override risk management. We see people online, we see these successful people, hedge fund managers and all these things, and we think, well, they're doing it, so why can't I? Well, that's like looking at someone who's shredded and ripped up in shape, and you're thinking, well, I see him eating pizza or her eating pizza and all these kind of cheat meals, why can't I do that? Well, not realizing that they didn't do that to get into the shape they are in now. So you've got to look at what did they do to get there. I can assure you, these hedge fund managers and all these successful people, they did not over leverage and over risk every single step of the way to get to where they are. So you've got to understand that, and you can't compare what hedge funds are doing to what you're doing, because they have different information to you. They've got different access. They've got different strategies. It's not the same thing. So kind of linking a drawdown to that's okay, so I'll do it too, is delusional. You're gambling. And remember, that when you're trading, you want to trade in a way that's enjoyable. Trading is difficult enough, but to put yourself into situations where you've got to worry about gaps and all these things that we can't control, why on earth do you want to do that? It's an accident waiting to happen. So I hope this humbles a lot of people. I really do, because if it happens to you on the smaller figures, I even hope it gives you perspective then, because it's only a matter of time. And I've had lots of stories. I've had people that I know before that they've been trading 50K and they're risking so much. And when it works out really well, which is the worst thing that can happen. So a little bit of a story. I was trading with someone, this was years and years ago, as a friend. He made about 40K on the trade. And I believe, what was it, pound Aussie. I'm sure it was pound Aussie. And the account size wasn't really in place to be risking that amount. And when it worked out, it worked really well. So think about how confident you feel when that happens. You just made pretty much 40K on a 50K account. You're risking so much to get to that. But what happens when it goes the other way? What happens when just the pure law of pure probabilities that you lose, let's say 3 or 4 trades in a row, but you've risked 5% on each one to get there. You're down 25% of your account. It is insane, the emotional drawdown. And then guess what? Those same people, they don't have an account anymore. They don't exist. So these kind of people that just pop up out of nowhere, focusing on chasing percentages, they don't last long. They're not in the game long enough. If you can learn from any of this, some of the smartest people in the world wipe themselves out. Ego gets involved. What do they all have in common? They cannot stick to risk. They get ahead of themselves. Their ego gets involved. But what can we learn from some seriously successful people? Billionaires like Warren Buffett. No one wants to get rich slow. Yet it is such a simple formula. I mean, you can make more money per month just by not spending as much as what you should. So people, they don't look at their own finances, for example. You could be, let's say if you're working as a job, you could be £500 a month richer if you just didn't spend your money on crap. Yet you can't look at it and you can't see it, and it's right under your nose. And it's the same with actually building wealth. You could build a lot more wealth if you just didn't focus on percentage games. Because when you're focusing on outcome-based things, and we talk about, there's a recent episode that we've done on focus on your processes versus outcome. When you focus on those things, it's not the most attractive answer. So I get it, I understand. You're feeling like, I've only got £5,000. I hear about this long-term thinking, but that doesn't apply to me. Once I've got more money, then I'll be safe with the risk. That's like saying once I've got a 6-pack, then I'll be healthy. They don't work together. You have to focus on what gets you there in the first place. And it's not the most attractive answer. It's not what people want to hear. But you got to realize you want to be in this game in the long run. You've got to do these things in place, be comfortable with it. It does take time. But guess what? You'll be around for the next 5, 10 years, 15 years. You've got to hang around with people in the right position that are doing that, people that are actually trading larger figures, not people that are trading £5,000, £10,000. They're going nowhere. They don't really last long. And I've seen so many of them come and go. I started learning in 2008. I've seen these people come and go. There has been so many strategies that I've seen, people that have chased percentages, and then when it works and when it works well, you feel amazing. You're like, look at these percentage gains. I've never even seen anything like this before. Then guess what? You're humbled and you undo all of your hard work, because it only takes one moment, as you've seen. One moment. There's so many stories of people doing that. So I hope this teaches a lot of people a lesson, and you realize that trading isn't for the weak, it's for the strong-minded. And there's a reason why only a certain people actually succeed, is because people just can't stick to risk. And if you do stick to risk, you're going to set yourself up for success. So I hope this teaches you something. I hope you learn from this. And for anybody out there, if you're somebody that has been, aggressively trading all different types of strategies, or you feel like that the more you risk, the more that you'll gain, this will teach you something. And God forbid someone like you gets given capital, you'll fuck it all up. And that is how it creates so many things. I mean, people, like, let's go into the deeper level of why I feel like we need to address this, is because people have committed suicide. People have committed suicide from this kind of shit. Don't fuck around with it. And when I see stuff like that, I think these are accidents waiting to happen, and we need to bring attention to it. Because if you don't know what you're doing, and then suddenly you're in a situation where you're thinking, shit, I'm trading someone else's money, I've just lost £40,000, then what do you do? And I fear that day happens for people, and it could have even happened now. So if we can bring awareness to it and promote something that isn't always the coolest thing, because it's not about making 20% every single day or squeezing every last profit out of every single trade. It's not always the most attractive answer, but people need to understand this and they need to know this. So if you're a trader right now where maybe you have lost some of your account, where maybe you didn't stick to the risk that you should have, even in a strategy that is sensible, what you can do to mitigate this, what you can do to make sure that this doesn't happen to you, is to have checklists in place, have procedures in place. For example, that you don't open more than 2 positions at one risk exposure at one time. So what I mean by that, let's say you risk 1% per trade, you have a threshold of 2%. So you never have more than 2% risk exposure to the market. It could be 3%. Just stick to something and have a game plan for that. Don't just decide, well, I'm only risking that, so I can just take that trade and then take this trade, because when the market turns, it can be very deadly. So have that in place. Another thing that you can do is have a maximum drawdown limit as well, until that you need to take a break. So for example, let's say you go into, I don't know, 5 or 10% of drawdown overall. Rather than you just being emotional and feeling like you have to climb your way out of that hole, because it's a horrible feeling, have something in place where you need to take a step back for even a couple of days, reset yourself. That can help. I've seen a lot of people do that. Have something in place where your maximum drawdown for the whole day as well, until that you can't trade anymore, is, let's say, for example, 2%. So if you take 2 losses in a row or 3 losses, have something. Now, we also have to understand that sometimes that you could take 2 losses in a row and that next trade happens to be the one that plays out probabilities. Yeah, I get it. But what I mean is have something in place, because I'm talking about not those people. I'm talking about the people that will take 8 losses in a row. So let's say you have 3% maximum drawdown. If you take 3 trades in a row and they're losses for that day, you take a step back and you come back tomorrow, you reset yourself, because that is the way people chase it. They start thinking, well, crap, I'm down 3%. What do I need to do now? Well, this trade looks really good, so let me risk 3% on this. And if I get a 3-to-1, I'll be back on top, and then I'll never do it again. And then those people, they're just chasing their tails. Sometimes you can make more money by doing nothing. People actually undo self-sabotage. They undo all of their hard work by they keep being in the market. Sometimes you can just take a step back and do nothing. You know, for example, you don't need to trade. You don't need to be in the markets all the time to make money. Being a trader doesn't mean trading every single day. Well, depending on how you trade. But I want you to use this as almost a trigger. Use it as a trigger to realize, even if you have to come back to this video and check in with yourself that, right, I'm not sticking to risk. I'm gambling again. This is unsustainable and there's no longevity in this. Let me reset myself and go back to it. I hope it does that for you. I really, really do, because I know what this game's like. You know, being a trader is tough. So having something in place that's going to set you up for success is the best thing. I wish that this was kind of drilled into me in an early age. You know, when I first started, it wasn't about that. It was, again, still about how can you be financially free the quickest way possible. It was never really about promoting, not the most attractive thing, but the thing that people need to hear, the thing that is actually going to make successful traders over the next 5 to 10 years. And then you'll realize that what you're doing, when you're focusing on percentage gain, this is something that people need to realize, when you're focusing on how do I make more money, your mind shifted into this outcome-driven mode that normally sets you up for failure. And it's normally a reflection of what you believe in yourself. Because think of it like this. If you're constantly chasing 20, 30% all the time, let that happen as a side effect of a safe system, firstly. But if you're constantly chasing that, your mind is probably saying to you, well, it's all good thinking about trading 100K, 250K, but I don't ever believe that I'll do that. So with my current set of beliefs of, well, I've got 5K, 10K, let me just try and turn that into 20, because that'll be nice. So it's normally rooted, if you feel this way, that you feel like you constantly have to chase percentage gains and that greed kicks in all the time, it's normally because there's a lack of belief in yourself. And if there's a lack of belief in yourself, it may be from who you're surrounded by. If you're surrounded by people that are not successful or that are trading larger figures, then, well, you're not going to be successful that way. You know, the old quote comes to mind, you know, if you hang around with clowns, don't be surprised if your life ends up looking like a circus. It's the truth. So hang around with people that are switched on, hang around with people that are humble, hang around with people that are focused, trading larger capital, following systems in place that is going to give you that long-term generational success and wealth, because that's what the game is. That's the business that we're in. And if you can do that, I can promise you, you'll be around for the next 20 years and you'll be telling stories about this, because these gaps, these are nothing new. This has happened for years. You know, in 2008, think about all the people, I mean, big banks in America. Look at 2008 crash. These are people that knew what they were doing, but yet you can't predict that. So it goes to show you from this video, you cannot override risk management. And I hope that sinks into a lot of people, because that's what's going to set you up for success in the long run. But guys and girls, really hope you enjoyed this episode. You know, gaps are nothing new. Let me know if you've been a victim of this, where you've got a bit too overhead of yourself, you've risked too much and thought, oh crap, you know, I've lost 30, 40% of your account. Any stories of how did you overcome that? How did you get out of that? Did that teach you a lesson, or did you keep on doing it? I would love to know, because there are so many stories. You know, I'm fortunate enough that I've never blown an account, because even from the very beginning, I was taught good risk management. There were times where I had a bit of a dabble, where I thought, you know, I could risk a little bit more. There were times where, you know, I remember pound Kiwi was a trade that I took where I had 1% on risk, and my ego got involved, where I thought, oh, it's definitely going to the upside, it's definitely going. And then it come down towards my stop, I kept dragging it down, and then before you know it, I lost about £1,400, when really at that time I should have lost about £200. So I know what it feels like. Our ego gets involved, and we feel like we want to be right. We feel like, oh, the market can never beat me, you know, and that's when you're delusional, you're in the wrong mindset. You need to reset yourself and realize it is a law of probabilities. That is it. And if you can stick to risk, you will be in this business for the long run. But guys and girls, I appreciate you watching as always. I hope that nobody took too much loss in these slippages and things like that. I really hope that you did stick to risk and you're in a good mental state. And guys and girls, let's keep moving forward. The opportunity in the market is very, very clear, and if we can stick to risk, we can do well. So guys and girls, have an incredible weekend ahead. Thanks for watching, and I'll speak to you all soon.